Welcome to TMS Insights. It's early April and it's been a frenetic time, Ben, on the global markets. So we wanted to bring some information to people to let them process this time. Ben, it's all come down to things we have been talking about, but we didn't know how pointed they would be. Global tariff war has seen markets sell off. Why are we talking about tariffs?
Good question. The US economy, frustratingly, is in superb shape. We had a great jobs report that came out on Friday night from America, and it really just feels like it's in a sweet spot at the moment. But Trump has clearly come in feeling he has this mandate to shake up the global order. Markets clearly, I think everyone has underestimated the speed and the size of the tariff measures, and also just the chaotic nature of different tariffs for different countries, and why they've got this and they've got this. It's created huge confusion, and with uncertainty and how long does this last for, and what are the motivations, we've seen a big sell-off in all asset classes, not just in shares. It's been across the board.
So Liberation Day was what he called it. April 2nd. It was, and we were surprised by the breadth and depth and magnitude of the tariffs which were introduced. And are actually going to apply as of tomorrow.
Yes.
The 10% was across the board as of Sunday. It's going to be at the mandated rate as of the 9th of April. So now there's frenetic deal making going on as well between countries, bilateral agreements and the like. Where do we see that part of it sort of coming to? Is there any way we can get any clarity on that? Because we know the cause of the global market turmoil was these tariff announcements. Is there a solution? Is it easy to do, or is it hard to get that organised?
Well, therein lies the problem. And a lot of this will come back to Trump, and markets will be putting pressure on him to create potentially a solution. So solutions that have been put forward have been a 60 or 90-day freeze, as an example, to allow these negotiations to occur before ultimately deciding what these tariffs look like. We've heard from Trump's colleagues saying more than 50 countries are currently directly negotiating with the United States, but it's hard to believe you could do that simultaneously in such a short period of time. And so with that we have seen the equity market has clearly been wrong-footed by this, and maybe that's where we need to...
Well, I think that's it. So if we know how it can end, because you can actually negotiate lower tariff levels, both countries. The protectionist agenda is obvious from the US, but it can be dropped altogether. So this now, if we change it now to talk about the markets, the market reaction's been really swift. So let's talk about how brutal the markets have been over the last few days. If we talked about the Thursday and Friday night trading in the US, we know that 2-day sell-off alone, let alone anything before or afterwards, was one of the things you see only every few decades.
Yes. So I think we've seen a size of that fall in a 2-day trading window in the S&P 500 4 times in history. We've got the 87 crash. We've got Lehman going broke during the GFC, COVID and the early days of COVID, and we've got this.
This one.
So
everybody should know this has been pretty rare. This
is not normal market behaviour. And I think for me the frustrating thing about this one is there really was no reason for a crisis. It's been literally man-made, and made as there's been a decision to create a crisis that didn't exist in the first place. Where if you saw those first 3 examples, they were sort of existential and out of people's controls. So that's hard. That's the hard part, I think.
And man-made problems can be man-made solutions as well. So we'll talk about valuations, everything first, but I just want to touch on, you said all the assets have been sold, but one wasn't, Ben, bonds. Bonds have rallied enormously, right? Now, Trump and Scott Bessent, his Treasury Secretary, have said, unlike Trump's first term, where he used the S&P 500 as his metric of performance. They said we're using the Treasury bills.
Yep.
Treasury bills have rallied.
Yep.
Does that mean he's a success?
Well, an outsider looking, so Trump's playbook appears to be reset the global order. America, we all know, has a lot of debt, and they have some maturities that are rolling off in the next 6 to 12 months, very significant maturities. Get the 30 and 10-year bond yield significantly lower, which will mean the cost of rolling those maturities is significantly less. Elon's out there trying to cut a whole lot of costs, and all of these measures, when you put them all together, should significantly reduce the interest cost of the US government.
But they could also engineer a recession in the US? Or
that's
globally?
the danger which the markets are grappling with. It also will pay for tax cuts that are due to be
enacted.
Yes.
So the recession word we've got to talk about. It gets used. It's very emotive. It's real. They happen at times. We haven't seen one in this country for nearly 40 years. So it's a long, long time. But if we said that this tariff war goes on for a period of months, the likelihood increases of a recession, does it not?
Completely. Yeah. And I think that's, where when you're looking at individual companies, you need to be a little bit careful that we don't know if this could last 3 days or 3 weeks or 3 months. And this is what markets are trying to price in, and it's actually impossible to price. But what we do know is that if this continues for too long, you've got to be careful about using the E in the PE because it could potentially be wrong.
Earnings could decline. That's a fact.
If we go into a downturn. But also we could see rapid central bank support kick in, which would be a positive for markets.
Valuations-wise. So let's now talk about valuations and what it means. So Ben, the market, I think we would have said on these insights editions on a monthly basis, had been trading at pretty decent levels, high valuations overall. That's now no longer the case.
No.
The market has corrected down to levels that are basically attractive. So on that basis, we would have an optimistic view of stock returns from this point of view.
And so my and maybe this is overly common sort of approach to taking is try and drown out the Trump stuff because I think we all have to realise that we cannot predict what happens in the coming weeks. It's to focus back to valuations, and also, I mean, we've been in markets for many years now, and yesterday felt like an extreme panic day where the market opened on its low and there was a rally, and we've seen the same thing. Last night was more constructive, so that was a significant drop, and it's actually closed flat. So maybe the bulk of that selling has washed through, and margin calls and all these sort of things we tend to see.
It's a readjustment that happens.
Has happened. And so my message would be is to focus on quality at the moment. In these big sell-offs, everything gets sold off. It's indiscriminate, and it doesn't really matter who you are. We've seen some stocks like Soul Patts and the supermarkets almost
going
untouched
up on Friday. Certainly.
But it's a lot of the stocks outside of those defensives look cheaper than they have in some time. I would say.
And the underlying nature of those businesses has not changed.
No.
As we said, their earnings might adjust a little bit. But they're coming from a position of strength. And we did just at the last Insights report on the earnings season, which we said was a very positive one, again, locally. And we talked about the payrolls from Friday in the US. Despite all this ruction, there's a healthy economic story, and we've got to keep an eye on it. But overall, I think the best thing is to do exactly as you said, keep an eye on valuation. And from a low point that we've now reached, probable returns become quite positive in the outlook. So, look, any other to give people a bit of a sense of the next few days and weeks? We're obviously watching every announcement that comes out, and we're here to help people, obviously. So if they need to chat and things like that, we're obviously wanting to hear from them. I
think that's the most important thing. Is if you're thinking, is there something I should do, or I'm a bit worried, or just needing to talk to someone, pick up the phone and have a chat to us. The phones have been remarkably quiet, I've got to say, which is good. I think everyone understands that these are not the periods that you want to make big decisions. Ultimately, we own high quality businesses that will rebound when markets do turn. And that's not a if, it's a when. We will go through this period, and it's hard to know if it's a shorter term bounce or this is maybe a 6 to 12 month sort of scenario that we're looking at. It's really going to come down to how quickly these tariff issues are resolved. But valuations, as you said, are much more attractive. We've seen, I think, emotion in the market has swung from greed at the start of the year to fear very rapidly today. And, on Monday felt to me like that day where there was a lot, that the weak holders were washed out, and maybe we start to see a more resilient market from this point. Fingers crossed.
Good one. All right. Well, thanks for joining us on TMS Insights. That's all we've got time for today.